Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic: does Fidelity allow self-directed 401k? So this is your chance to get answers. Use the chat to ask questions on today's topic or anything else. Chat them over now so that we can be sure to get to them all. Let's get started. Are you thinking about opening a self-directed 401k with Fidelity? Maybe you've heard of checkbook control, the mega backdoor Roth strategy, or investing in alternative investments such as real estate, private equity, cryptocurrency. But you are wondering if Fidelity lets you do any of the above. So in today's session, we'll break down exactly what Fidelity does allow and what it does not when it comes to self-directed 401k investing. Let's first talk about the solo 401k eligibility requirements. Obviously, not everybody qualifies. So as the word solo implies, it's for business owners. The business can be a sole proprietorship. It can take any entity structure, such as an LLC taxed as an S corporation, an LLC taxed as a partnership, or even an LLC taxed as a sole proprietorship. It can also be a Schedule F if you're a farmer. What matters is not the entity type, but rather the underlying activity. In other words, you need to make sure you're doing the work, performing material services with the intent to lead to earned income from self-employment activity. Also, your business cannot employ any non-owner full-time W-2 employees who work 1,000 hours or more in your business. You have to apply that rule across all of your businesses. So if you own multiple self-employed businesses, you may not qualify for a solo 401k for the business where you do not employ any full-time W-2 employees. If you do have another business that employs full-time W-2 employees, that would fall under the control group regulations. You can exclude anyone who's under age 21. Therefore, if you employ anyone under age 21, even if they work 1,000 hours or more, you can still open a solo 401k plan. If your business is a S corp or LLC taxed as an S corp, for example, or taxed as any other entity type, and if that business employs contractors, then you can exclude contractors from the plan as well. But as long as you're working for the business, you can continue with the plan and open a solo 401k plan for that matter. So obviously it's important to understand the eligibility requirements before you open a solo 401k plan, as not everybody qualifies. Looks like we've got a question here. I have a current solo 401k at E-Trade with both traditional and Roth accounts, but the Roth account is currently empty. I realized I could take advantage of the mega backdoor. I create a plan with my solo 401k. Can I apply those plan documents to current accounts? Do I close my accounts and open new ones at E-Trade? Or do I need to open new accounts at another institution like Fidelity? Great question. So you would not be able to continue with those existing E-Trade brokerage accounts because those brokerage accounts are specific to the solo 401k plan offered by E-Trade. However, you can certainly switch from E-Trade to a self-directed solo 401k from my solo 401k financial, which has all the bells and whistles, such as being able to take a participant loan, being able to invest in alternative investments like real estate, private equity, as well as traditional investments like equities, as well as utilizing the $1,500 auto contribution credit, which can be added to that plan when you restate it. When you restate that existing plan to a solo 401k plan through my solo 401k financial, we'll add the auto contribution credit so that you can essentially cover the cost of having a solo 401k plan for years to come. The $1,500 auto contribution credit is a dollar for dollar credit. It's equal to $500 per year for a maximum of $1,500 over 3 years. And a self-employed person must have a solo 401k plan from a provider, such as my solo 401k financial, whose plan document is drafted to include the auto contribution credit feature along with the necessary schedules that you have to sign. It's a dollar for dollar credit, and we can add that even to existing clients, or in your case, to your plan once you convert it over to a plan from my solo 401k financial. If you're an existing client of my solo 401k financial and you opened the plan with us prior to December 31st of 2023, this auto contribution credit was not available at that time, but we can add that to your plan now. If you're an existing client, go ahead and submit a support ticket through our website. If you're an existing client who opened the plan with us prior to December 31st of 2023, and we can add that auto contribution credit to your plan so that you can start utilizing it this year in 2025 for a total of $1,500 over 3 years. Let me share that link here, the support ticket for existing clients. So take a look at that link there. You can submit a support ticket. Now let's keep talking about the auto contribution credit. So once it's added to the solo 401k plan, even though it's referred to as an auto contribution credit, which is kind of confusing, you're not required to contribute to the plan in order to take advantage of it. You are required, however, to have a plan that allows for that auto contribution credit, like a plan offered by my solo 401k financial. And once you opt out of contributing to the plan, you can still contribute in whatever amount you want to, up to the overall annual limit, which is $70,000 for someone who's under age 50 for tax year 2025, for example. And you're going to claim that $1,500 credit over a 3-year period. It's going to be claimed in $500 increments. For example, if that auto contribution credit is added to your plan here in 2025, you're going to file Form 8881 next year when you file your business tax return so that you can claim a $500 credit. You're going to file another one for tax year 2026, so that would be filed in 2027 to claim the second $500 amount. And then a third one will be filed with your 2027 tax return to claim the final $500 credit for a total of $1,500. The Form 8881 is pretty simple to fill out. We do have a video tutorial as well as a PowerPoint that we can shepherd our clients through. But great question. To finish answering your questions, the brokerage accounts for the solo 401k plan that we offer, while they can be opened at E-Trade, it's a nightmare to open them at E-Trade, to be blunt. And it's a nightmare on E-Trade's side. For some reason, ever since they merged with I think Morgan Stanley, E-Trade has been horrendous to work with. For example, even though E-Trade will provide what they refer to as trust brokerage accounts for a solo 401k offered by a company like my solo 401k financial that allows for the mega backdoor, I don't know if E-Trade purposely does this or if they just don't know what the heck they're doing, but I've seen E-Trade take up to 6 months before they'll open the darn new brokerage accounts. And oftentimes, the client has to submit those over and over, and there's been many instances where E-Trade just says, sorry, we don't know how to open these. So I would not utilize E-Trade for the brokerage accounts. Obviously, it's your money. Here at my solo 401k financial, one of the reasons we stand apart from our competition is that we let you decide where to hold your darn money. So we don't try to push it to a bank or certain brokerage firm because we're getting kickbacks. We don't get kickbacks from anybody. So whether you use E-Trade, Fidelity, Schwab, we'll assist you in opening those brokerage accounts. However, a word to the wise, E-Trade is a nightmare to work with. So in your situation, think about that before you decide to use E-Trade for the new brokerage accounts. You may want to instead consider Fidelity or Schwab. They're much easier to work with. They typically open the brokerage accounts within 2, 3, 4 days versus 6 months with E-Trade or not, or never at all with E-Trade. And then it gets even more fun with E-Trade. When it's time to move the existing E-Trade solo 401k over to the new brokerage accounts, you're going to want to add another 3 months. So you're probably looking at 9 months before you even have funds in the new brokerage accounts for the solo 401k if you use E-Trade. So in short, I would never use E-Trade. It used to be maybe 3 years ago, they weren't as bad. They would take maybe a month, but now you're looking at 9 months in total. So great question. Okay, let's keep going on here. We got another question here from Ross. So can E-Trade be the host institution of my solo 401k plan? As I just spent 5 minutes yapping about that. Yes. Is it a good idea? No. Would I personally do it? Heck no. Great question. Okay, so let's keep going on here. So today's topic is, does Fidelity allow self-directed 401k? Go ahead and continue to type your questions over during the daily webinar here, and we'll pause and answer those questions as they come in. So let's break down the Fidelity Solo 401k. We just talked about the eligibility requirements. So if you're thinking about opening a self-directed 401k with Fidelity, in other words, a solo 401k plan that's offered by Fidelity versus a truly self-directed solo 401k offered by a provider like my solo 401k financial, then you need to understand what Fidelity allows. So Fidelity solo 401k, their solo 401k is brokerage based. That means that they only allow for equity investments. They do not allow for alternative investments like real estate, physical crypto, where you open the account directly with an exchange like Gemini and Kraken. They don't allow for private equity investments. They don't allow for solo 401k participant loans. They also do not allow for the mega backdoor Roth strategy. And moreover, as I've already covered, they don't allow for the auto contribution tax credit, which is $1,500. So you're essentially leaving $1,500 on the table. The IRS created the auto contribution credit to help subsidize the cost of having a solo 401k for the self-employed. They're trying to get individuals to save for retirement because, of course, this nation is in so much debt, and also the Social Security fund's probably going to run out here in the next 5, 10 years, that we need to make sure that individuals save for retirement, and that's typically done through defined contribution plans. And a solo 401k plan is such a plan. Now, one great thing is that you can actually pair a solo 401k offered by my solo 401k financial with Fidelity. In other words, a solo 401k plan from my solo 401k financial has all the bells and whistles, including the mega backdoor Roth, being able to take a solo 401k participant loan, and so forth. But we can help you use Fidelity investments to hold the funds for a solo 401k offered by my solo 401k financial. Yes, you heard that right. While Fidelity offers their own solo 401k, they will also provide what they refer to as investment-only non-prototype brokerage accounts for a solo 401k offered by my solo 401k financial, where my solo 401k financial is the plan document provider, provides the compliance support, and does the reporting, and Fidelity acts as the custodian of the funds. So it's a win-win situation for all 3 parties. That's you, Fidelity, and my solo 401k financial, because here in my solo 401k financial, we don't have access to our clients' funds, nor do we want nor need access to your funds. So if you use Fidelity, Schwab, your local bank, credit union to hold the funds, we're never going to have access to your funds. Instead, we'll be in the background providing the support and handling the plan updates with the government and so forth. So again, Fidelity's solo 401k platform is basic. It typically allows for traditional investments like stocks, index funds, bonds, CDs, and so forth. So Fidelity's platform might be good for, in other words, Fidelity's solo 401k may be good for someone who's looking to just invest in equity investments. They're not looking to utilize the mega backdoor Roth strategy, nor do they want to be able to take a solo 401k participant loan and they want to leave $1,500 on the table because the Fidelity solo 401k doesn't come with the auto contribution credit. So if you have an existing Fidelity solo 401k, you may still want to just restate it to a plan for my solo 401k financial so that you get that $1,500 auto contribution credit over 3 years, which is broken down in $500 increments. So take a look at that slide. I talked about it earlier. And again, it doesn't allow for the mega backdoor Roth. Okay, it looks like Mr. Let's see here. Give me a moment here. Again, if this information is helping you to feel more confident about your future, please take 1 second to like and subscribe. It tells the platform this content is valuable, which helps other solopreneurs like you to find it. Subscribing also guarantees you get notifications of all of our crucial content that we deliver every day to help you secure your retirement. Okay, it looks like we have another question here. Would you think opening a new solo 401k to Fidelity, rolling over from E-Trade, and then executing mega backdoor could happen within this tax year? So here's what I would do if I were you. I would go ahead and open a solo 401k with Fidelity, have that E-Trade solo 401k restated from from E-Trade over to the Fidelity solo 401k. You want to start that ASAP. I mean, you're talking about, we're about to go into November, so there's no more time to procrastinate. You only have 2 months if you're trying to get this done by the end of this year. Then circle back and we can help you open up a solo 401k with my solo 401k financial, where we can restate that existing solo 401k at Fidelity once it's been converted from E-Trade. Then we can restate the Fidelity solo 401k to a solo 401k from my solo 401k financial and help you to open up new brokerage accounts at Fidelity for the solo 401k that we offer. And you would do that if you have securities in your account. Let's say you hold some stocks or mutual funds in that existing E-Trade solo 401k, which you do not want to liquidate. So those can be transferred in kind to your Fidelity solo 401k, and then you can circle back and restate that solo 401k to a self-directed solo 401k from my solo 401k financial. And we would help you open up the brokerage accounts at Fidelity for the mega backdoor Roth. So let me give you an example here. Let's take a look at a slide here. So here's a good slide here of the mega backdoor Roth. So we would help. So this is an example of a 1 participant plan. So the plan is sponsored by your self-employed business. A solo 401k is a defined contribution plan. It is not a defined benefit plan. Only defined benefit plans can hold multiple types of funds. But the solo 401k, you need to have a separate bucket, aka bank or brokerage account, for each source of funds to separately track those sources under the solo 401k plan. So the first brokerage account would be labeled pre-tax, the second Roth, and the third one voluntary after tax. So 1 plan, 3 separate holding accounts under the plan. Now, keep in mind that you're not required to make pre-tax contributions. Obviously, if you have an existing solo 401k at E-Trade and it holds pre-tax funds, then ultimately those funds are going to end up in the pre-tax bucket. Now, the mega backdoor, you would make the voluntary after-tax solo 401k contribution to the voluntary after-tax solo 401k bucket. So this bucket right here, and then immediately convert it to the Roth solo 401k or a Roth IRA. And here in my solo 401k financial, We handle the reporting for that mega backdoor Roth conversion. We do that by issuing Form 1099-R. So that's why it's important that you make that contribution to the voluntary after-tax solo 401k bucket. Then it gets converted to the Roth solo 401k. And then you complete our online conversion form that we use to collect information to issue that Form 1099-R. And then we'll issue that Form 1099-R to you. And a copy gets also filed with the IRS via Form 1096. Okay, so hopefully that answers your question there. Let's see. Do my solo 401k documents allow rollovers from Roth portion of the solo 401k into a Roth IRA? Well, number one, yes, our plan documents do allow for it. Number two, which is more important, is that it's a statutory IRS regulation that you can never transfer funds in a Roth solo 401k to a Roth IRA unless you meet a triggering event. And again, I can't stress enough how this is an IRS statutory regulation. It's not in my solo 401k regulation. It's an IRS statutory regulation where if you have funds in a Roth solo 401k, you can only transfer those Roth solo 401k funds if you're age 59 and a half or older, no longer self-employed, or if those Roth solo 401k funds stem from a transfer that you processed from former employer Roth 401k to the Roth solo 401k. You can only transfer Roth solo 401k funds out of the plan once you meet those requirements there. Now that's different than the mega backdoor Roth strategy. The mega backdoor Roth strategy, as I just elaborated, that's where you make a voluntary after-tax solo 401k contribution. That's not a Roth solo 401k contribution. That's an after-tax contribution, voluntary after-tax. So it goes into this bucket. The plan does allow, and so do the IRS statutory regulations, they do allow for the conversion of those voluntary after-tax solo 401k funds to the Roth solo 401k or the Roth IRA. So there's a difference between the Roth solo 401k bucket and the voluntary after-tax solo 401k bucket. Don't confuse those. All right, so great question here. Actually, you're not the only one here. We have a lot of people joining today's webinar, but go ahead and keep asking your good questions. Okay, so let's continue here and go ahead and continue to ask questions during the daily webinar, and we'll pause and answer those as they come in. So again, today's topic is, does Fidelity allow self-directed 401k? We've been talking about that at great length. So we already covered this slide here. So what does true self-direction mean? Well, true self-direction means that you have got control and flexibility over your solo 401k plan. So again, the Fidelity Solo 401k is not a truly self-directed 401k, aka self-directed solo 401k, because you don't have the true control or flexibility over your solo 401k. So when you have true control over your solo 401k, that means you can pick your investments. So you can diversify outside the stock market. Yes, you can still invest in traditional investments like equities, but now you're going to be able to invest in physical real estate, whether it's commercial, residential real estate, or land, for example, as well as precious metals, cryptocurrencies, promissory notes, private equity, and so forth. And you're going to have checkbook control. What the heck does checkbook control mean? We get that question quite a bit. Checkbook control just simply means that you have more control over your solo 401k. That means it's self-directed. Also, you'll be able to make these alternative investments by wire. Let's say you want to invest in real estate. Let's say you find a rental property that you want to rent out and you want to invest in that property using your solo 401k. Well, your solo 401k can invest in that property where the plan owns the property. And you can make that investment by wire, having those funds wired from the Fidelity brokerage account for the self-directed solo 401k offered by my solo 401k financial to the title company. And then as rental income comes back, that will flow back to that brokerage account at Fidelity for the self-directed solo 401k. Now, the checkbook control option might come into play. Let's say you need to pay a property tax bill. You can write a check from that brokerage account to cover that property tax expense because that property is owned by the solo 401k. Therefore, not just like the income must flow back to the solo 401k holding account, that is the brokerage account. The expenses, such as property taxes or costs for repairing that property, have to be paid with funds from the solo 401k, and you can write a check to make those expense payments. Also, truly self-directed means you can utilize the mega backdoor Roth strategy by making voluntary after-tax solo 401k contributions as part of the mega backdoor Roth. And you can have the best of both worlds, meaning that you can open a self-directed solo 401k through my solo 401k financial, and then we can help you to establish the investment only non-prototype brokerage accounts at Fidelity for that self-directed solo 401k offered by my solo 401k financial. You're going to be able to continue to invest in equities through that Fidelity brokerage account for the self-directed solo 401k offered by my solo 401k financial. But you're also going to be able to invest in alternative investments, be able to take a solo 401k participant loan, have the auto contribution credit, and of course the mega backdoor Roth strategy. What most investors don't realize, well, Fidelity is great for brokerage accounts if you want to just simply invest in equities. So the Fidelity Solo 401k is good for traditional investments. But if you want to have a truly self-directed plan, such as one offered by my solo 401k financial with all the bells and whistles up above, then you need to make sure that the plan documents have all the necessary language to allow for those strategies. So again, you can combine Fidelity's services, their custodial services, by utilizing Fidelity's brokerage account services for a solo 401k offered by my solo 401k financial. Here's an example of combining Fidelity and my solo 401k financial for a solo 401k plan. Jane opens up a self-directed solo 401k with my solo 401k financial. We help her open up brokerage accounts at Fidelity, known as investment only non-prototype brokerage accounts for the plan offered by my solo 401k financial. Jane can then invest some of those funds in equities, stocks, or even all the funds in those types of investments, but she can also invest those funds in real estate. So she may invest 50% of those funds, let's say, in a rental property. So now the plan owns real estate and it also owns equities. And it's all done through my solo 401k financial with the funds being held at Fidelity. So one plan, multiple accounts, full flexibility. Multiple accounts means multiple holding accounts. That's a pre-tax bucket, a Roth solo 401k bucket, and a voluntary after-tax solo 401k bucket. Okay, so some of the key takeaways here when determining whether does Fidelity allow self-directed 401k is that Fidelity does not truly offer a self-directed solo 401k, as we found out here. But my solo 401k financial does. And you can still utilize Fidelity for a self-directed solo 401k offered by my solo 401k financial. So talk about control efficiency and both tax efficiency. All right, so we looks like we're coming to the end of our daily webinar. If you haven't yet, go ahead and type over your questions and we'll answer those as they come in. Now, at my solo 401k financial, as I stated earlier, we serve as the plan document provider, but we also provide annual compliance support for clients who timely request it. You don't have to have my solo 401k financial provide these additional services, but they're actually free services. They're included in our annual fee. Keep in mind that our annual fee is for being the plan document provider. because you're required to have a solo 401k plan document provider. But we've made a business decision to also allow or to also provide the following support services and to not charge additional fees. So we'll prepare Form 1099-R for distributions, conversions, whether it's a pre-tax conversion or a mega backdoor Roth conversion. We'll also prepare the Form 5500 Easy, which is an annual informational return that applies to the solo 401k plan once the market value of that plan is greater than $250,000 in value. So you need to make sure you timely request these compliance services because we don't have access to your funds. And then we'll go ahead and perform those at no additional fee. Okay, that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here later today with more crucial content to help you secure your retirement.